you can't get everything. Which way do you want to go? Do you want to go to an area that's less expensive to keep your budget, or do you want to increase your budget? So that's kind of, to me, what it means when things align, business happens naturally. And it's like being a Sherpa or a guide. We're guiding people to see the reality of what's happening.
So understanding how to use values in sales and negotiation is key to any business. So if you are a business professional, you really want to listen up here. There are countless sets of values at play in every business, but the most important values are this. Number one, the values of the business itself. Number two, the values of the target customer. Okay, the values of the business itself and the values of the target customer. When these values align, business happens naturally. Okay, and so in other words, it just flows, right? The conversations flow, the solution to the challenge flows. I think the overall integrity or the vision for where you're helping to take your customer, that is, that equally hopefully is aligning too. And so those two keys are very key. So when they align, it happens naturally. Or the values of each principle to a transaction. So tailoring a negotiation or sale to the values of each principle keeps each party at the table interested in a positive resolution. So as long as you have values that are aligning and you can come back to that bigger picture, that's what keeps a lot of people at the table. It's when values are mismatched or completely out of sync that deals can fall apart. Jason, you want to add to any of this or bring you any examples of this?
Well, it just sort of highlights, let's say you're looking at a very expensive area like an Aspen. We're talking over $1,000 a square foot type of thing. And if someone comes in and goes, hey, I have $500,000 to spend, it's like, okay, let me show you what you can spend your money on versus, yeah, that ain't going to happen, which is basically what you're going to say because there's nothing for sale that is that cheap in that area. So it's setting expectations and showing them the reality of the market. And you could do that one of two ways. And I like to do both. The first one is let's set the price point at that area and see what it pulls. And it pulls what it pulls. It may be nothing. It may be one home, whatever it is. Then you flip it around and go, let me show you how much what you told me will cost. So basically, I'm not telling them anything. The market's showing them, hey, listen, this is what we have. These are the options. You can't get everything. Which way do you want to go? Do you want to go to an area that's less expensive to keep your budget, or do you want to increase your budget? So that's kind of, to me, what it means when things align, business happens naturally. And it's like being a Sherpa or a guide. We're guiding people to see the reality of what's happening. On the flip side, in terms of business, the way this works is you have a customer who wants to buy a house. We get paid as realtors when that customer buys the home. So it's those values that are aligning. And it's like, let me show you how this works. And I'll give you a great example on this. I had a client who had been looking for a home for 9 months. Now, I hadn't taken them out, but they've been searching through MLS, Zillow, everything to see what's been coming. Great. I always encourage that. Occasionally I get a call. Hey, found this great home in Zillow. It's like, yeah, no, that's long gone. And they're like, oh, sorry. All right. Anyway, so this client came to me and we're talking about what he needs to offer to get accepted to get this home. It's been on the market for about a week and a half or so. So the chance of a second offer coming in is still there, but not great. And I know he's really risk adverse. So I asked him, I go, do you really want to try to drive the price down? He goes, I've done the math. It really doesn't matter. He goes, so should I offer a full price? He goes, well, I shouldn't really be asking you. You get paid on commission. The more I pay, the more you get. I go, well, let's do the math. So we ran through it. I go, the difference between what we were going to offer in terms of a negotiation and potentially lose the house when someone else steps in versus a full price offer was like a dinner out for me and my wife. And I put it to him in that space. I went, listen, for me, it's a lot more important you feel that I did such a good job that you refer 3 of your friends, because that's a lot more money that I get than just inching you up a little bit. I go, this comes down to you and what your risk adverse nature is and how much risk you're willing to accept. So as soon as I put it that way, he's like, Perfect. Let's do a full price offer. And I was talking about coming in about 7% under ask. So we're talking significant money for this home. And he's like, yeah, don't want to play that game. Because
So
he's been looking that long and he knew what was out there. And this
it's
was
so good. Yeah. When making a sale, if you can speak to the values of the customer, right? All sales are made emotionally, right? And so if you can cater to a customer's value, that helps the customer feel good about deciding to buy. And so it's not just the numbers, it's the emotional part. In fact, it's 80, with anything with money, 80% of it is emotional, 20% is the head knowledge. And it's same thing with negotiations. And so, for example, if your customer values, a certain thing, they're more likely, if you can speak to that and connect that with the deal, they're more likely to do the deal and make it a win-win and feel really great about it, which is ultimately what you want to do. You want to deliver an amazing wow experience that they send more referrals, right? They feel great about it. It's a win-win for everybody. And so using values in negotiation, you must learn what the other side values most. And by the way you can help to do that is to mirror and label what they say, right? You might say, what are you most passionate about? Selling your business, deferring the tax. What makes it about that? And I ask this question, continuously to my clients and or potential clients. And they just say, I just can't imagine, 30, 40, 50% just being, gone to the IRS forever, right? And in other words, I'd like to, grow the wealth and build it, right? And it's just really painful. There's an emotional response to that. And there's times when that's just completely out front, right? There's other times where I have to kind of ask that or figure that out. The other thing could be just not so much not paying the tax or being able to defer the tax. It's just what the cash flow can mean for them, for the capital being moved over. And that's the most important thing. Oh, I can double my cash flow, right? Oh, okay. If I can double my cash flow, what would that mean for me on a month to month, day-to-day basis, right? With my time and my energy. So figure out and learn and study and what your potential client values the most. And so then when you're creating an offer or counter offer, focus the main points on the values of the opposing side. In other words, just because you value it most, or you think your other clients value it most, or they have, doesn't mean this client's kind of, doesn't mean they value it most, right? So you want to tailor the offer to a customized offer that really meets the client where they're at. And they're going to be far more willing to say yes, to move forward. So for example, if there's a timeline for a party, they really value time. It's the most important. Offering to close a sale on time or early will speak directly to the party's value of time. In turn, the buyer can ask for something in return to meet a value of their own, whether it be price, whether it be in Jason's scenario, like a home warranty to cover any potential loss of an AC unit or some kind of appliance that might be going out. So key is focus on what they value most, and then tailor your offer, your counter offer to that value. And that is the key to winning with values in negotiation. Jason, you want to add to that or subtract or anything else there?
Well, working with investors, especially someone who's doing a 1031 exchange, this is enormous because they're under really stringent timelines. So they might be willing to give up, like, let's say the seller is saying, this is a 1031 exchange. Knowing that, you could potentially work the deal so you're spending less to get the home for the buyer, because the seller is looking at losing so much more money in terms of taxes if they don't get that 1031 done in time. So knowing this up front really can help tailor your negotiations and can be really a big win-win for everyone, because someone's like, I really can't go a dime more than this price. It just doesn't financially make sense. Someone else is like, I really absolutely positively have to get out of this thing by this date. This is a hard drop dead date.
Yep.
Knowing that, that's gold.